Look, what makes our business a bit different is that we offer a couple of things for our customers. The first one being we offer a free conveyancing service. It's not done by us, but what we do is we contract it out to generally local conveyancers. They offer a free conveyancing service to them. So that saves it, although it does save the client money, but that's not the sole purpose around this. We set this idea up because what we found was there's a lot of settlements that don't happen on the day they should, and there's a lot of stress put on the client when they're buying a home. So our aim was for us to be able to work closely with a conveyancer, build a relationship so they know how we work, we know how they work, and we can alleviate the stress from the client and ensure that we make the settlement happen. And I mean, in just over 3 years that we've been running this promotion, we've not had a settlement not take place on the day it should have done. So it came about actually from when I bought my own home, and I found the process quite mishandled. I obviously handled my own finance, but we used another conveyancer, and I found it quite stressful in places where it didn't need to be stressful, where there's information that the broker has or the conveyancer has, and either person just needs to have that relationship where they can share it without bothering the client. Now, if we need to take information to the client, we will, but we try to keep them away from the stressful process. But 4 years ago, I worked for one of the largest mortgage broking companies in Australia. I did my training with them, and then I worked with them for a period of time. And it was whilst I was working there that I noticed that I felt it could be done different, and it could be done more to benefit the client than it already is. So I decided to go back into small business and set up this mortgage broking company and offer a service that benefits the client and not just the banks. The other thing we offer is a free refinancing. So the way, and recently with the recent rate changes, that's a good example where not all banks pass on the full rate cut or the rate cut at all. So where you've got a lender who's very competitive today, they don't necessarily remain competitive in the future. So what we did was we found that every time someone refinances, they've got to spend money on discharging their title, putting a mortgage against their title. The bank will charge them a discharge fee. The new bank will charge them an application fee. These are all costs that mount up. So what we've done is we pay these costs. This excludes fixed rate break cost, obviously, because that's a contract for a set period. But your typical refinancing costs, we will pick that up, which saves the client from being locked in and feeling like they're trapped by a lender. So they've got the freedom to follow and chase that cheaper rate the whole time.